Good afternoon, ladies and gentlemen, and welcome to the fifth week. Discuss the
implementation of a new operational system, it must first be proven, and then you move forward with a sales and marketing strategy. We have been in numerous discussions with doctors and affiliates regarding the Quad Video Halo system. The system meets all of its performance requirements and continues to increase our confidence level in the readiness for expansion. Throughout 2017, we presented at injury type seminars where we initiated an advisory board, announced a new affiliate location, and brought in Jeff Kronk as the Chief Operating Officer to focus on taking the affiliate program nationwide. In February, we participated and spoke at the James J. Mathis Injury Care Seminar in Atlanta. This is a type of an event that provides an opportunity for my team and I to present Spine Injury Solutions Quad Video Halo system to hundreds of injury practitioners while educating doctors and affiliates, period. The integration I had with the doctors and many other people in the industry gives me the insight on how to better serve and expand our operations to fulfill the need while expanding our business. During the first half of the year, we launched the Quad Video Halo website and we upgraded our Spine Injury Solutions website. As part of our nationwide expansion, we believe that having detailed information regarding the Quad Video Halo system online enhances our sales and marketing efforts. We also want to be a fully transparent, public traded company. This said, we took the initiative to upgrade our corporate website to provide our shareholders and partners the needed information on a real-time basis. Websites, especially in the medical space, need to be updated. We consider our website information portals, and we will constantly update the information on both the business side and the investor side. We consider this a work in progress that will never end. We are presently updating both websites as we expect a significant increase in traffic from potential investors this spring. In March, we announced the formation of an advisory board with personal injury law specialist Lawrence Tilka as chairman. Lawrence has practiced in the Houston area for over 34 years, first as a defense attorney representing liability insurance companies for many years, and now he represents injured clients. In addition to personal injury cases here in the United States, he's handled cases in Mexico and Honduras. Larry's experience is invaluable to Spine Injury Solutions. In August, we brought in Jeffrey Kronk as Chief Operating Officer. Jeffrey was the director at Spine Injury Solutions, but his knowledge and experience, including being a co-developer and marketing director of a successful software program on pinpointing spinal ligament damage in injury cases, made him a perfect fit for us. During his position as a board of director, he became more knowledgeable about Quad Video Halo capabilities, benefits, and most importantly, the market size. He decided to join Spine Injury Solutions as the COO. Jeff's main responsibility is to focus on the affiliate program and identify a full-time sales and marketing person in Houston. The Quad Video Halo program does have a sales process. This is not something that is sold after one call or one meeting. The sales process is something that we all know was going to occur, and with Jeff and others leading the way, we are confident that our internal goals will be met. When Jeff joined us in August, we immediately had discussions with several prospective affiliates. Over the last few months, the discussions became advanced discussions, and we are speaking with potential affiliates around the globe. Jeff and I speak on a daily basis and are focused on expanding the affiliate program in 2018 and beyond. Jeff and I understand the need for a full-time sales marketing person in Houston. I'll now turn the call over to John Bergeron, who will discuss our financial results for the year.
Thank you, Bill, and good afternoon, everyone. I will now review the results for the fiscal year ended December 31st, 2017. Revenues for fiscal year 2017 were $1.8 million compared to $2.1 million in 2016. The decrease in revenues was primarily attributed to a loss of an affiliate in San Antonio and a significant decrease in Tyler revenues. Hurricane Harvey also had an effect on our Houston affiliate as the office was closed for 2 weeks, and it took approximately 2 months for things to get back to semi-normal here in the Houston area. The net loss for fiscal year 2017 was $405,000 as compared to a net loss of $755,000 for fiscal year 2016, a decrease of 46%. Decrease in the company's net loss is due mainly to a lower bad debt allowance for the company's Florida operations. As you know, our affiliate in Florida went bankrupt and things were difficult, so we decided to write off all of the Florida AR. But please know that we still sporadically collect Florida payments. We continue to fund our Quad Video Halo recording device business, and that takes approximately $20,000 per month in operating expense to run this part of the business. We feel there is a significant upside with the new products being developed and tested. We hope to announce something in the second quarter regarding the QBEX operations. We had $1.8 million in collections last year compared to $2.4 million in 2016. This decrease is due to Florida and some of the agent getting older with other affiliates. This decrease was the main driver of our $149,000 use of funds from our operations as listed on the cash flow statement. Finally, our debt from 2017 went down $25,000 from the prior year. The Wells Fargo line of credit still has $425,000 in capacity to borrow on at December 31st, 2017. We did pay down $75,000 in debt on other notes to shareholders. Finally, to continue our funding business, we must have access to additional funds. We have spoken with several fund managers who are interested in an equity debt financing arrangement. With the stock price so low, the dilution of the company would be too great, so we have avoided this type of equity funding. There are several lenders out there that want to structure deals where they loan you money and have the debt convertible into common stock after 6 months, which we consider this type of transaction to be toxic. We believe this would start down price pressure on our stock price, hurting our current shareholders. Okay, with that, I'll turn it back to Bill.
Thank you, John. Before we move to questions and answers, I'd like to take a moment to reiterate our laser focus on our multi-pronged growth strategy. The Quad Video Halo allows surgeons and pain management providers the ability to bring modern video documentation technology into the treatment and operating rooms. We believe our market development efforts are really starting to pay off with multiple affiliate programs requests for proposal that directly leverage our Quad Video Halo system. We're also making measurable progress in securing meaningful new affiliate program partnerships that are essential to our commercialization and Quad Video Halo capabilities. We demonstrated our commitment to growth by having 4 locations and 780 procedures provided throughout 2017. I believe fiscal 2018 will be a significant moment in our history, a year of transition with our eyes clearly focused on the opportunities that will fuel our growth, from new affiliates to new markets and partnerships. Thank you for your interest and time today. Andrew, we're now ready to take questions.
Thank you, Doctor. At this time, if anybody has a question, please, while you are online at the webinar, you could submit your question and we'll be happy to read your question. And Dr. Donovan or the CFO, John, will answer your questions. At this time, I'm pleased to say there are a number of questions that have been submitted, and I will read the questions and then allow Dr. Donovan or John, the CFO, to answer those questions. The first question is, what specific steps, if any, have you taken since the last conference call to improve SPIN's execution of its business plan, whatever that plan is? I would ask that Dr. Donovan answer that question, please.
The plan for taking spine injury solutions successfully into the future first requires execution. Having 4 locations, 780 procedures, improving our gross margins are all part of our plans to take spine injury solutions to the next level.
Thank you. The next question is, what is SPIN's specific business plan, timing, and objectives with regard to adding more affiliates? What do you attribute to your failure to add additional affiliates at a reasonable rate in the past? Dr. Donovan?
Well, first, I would like to say we don't consider it a failure by not having more affiliates as of today. As is the case with any business, you want to be methodical and execute properly. Building something quickly doesn't necessarily mean success. When we rolled out the Quad Video Halo affiliate program, we knew we had to be careful and expand properly. We want to support our affiliates and have them grow with us. With respect to adding more affiliates in 2018 and beyond, I am pleased to say we have implemented a strong sales and marketing program, more calls and meetings with injury practitioners on a larger scale. We now feel, with 2 years of successful procedures and settlements, we are able to quantify the success to potential affiliate partners.
Thank you, Dr. Donovan. The next question, what is SPIN's specific business plan, timing, and objectives with regard to selling the QVH to third parties outside of affiliates? What do you attribute to your failure or make sales at a reasonable rate in the past year?
Andrew, this is similar to adding more affiliates. We are looking for more opportunities, and we have 2 years of documented success that allows us to sell more QVH systems.
Okay, thank you. Again, if anybody has any further questions, please feel free to type them in and ask them. The next question is, through your wholly owned entity, you spend a substantial amount of time servicing SPIN affiliates, for which your wholly owned entity gets paid from SPIN. let me rephrase it. Substantial sums as reflected in the SEC filings. Let me ask the question again. It came in a little unclear. Again, I quote, through your wholly owned entity, you spend a substantial amount of time servicing SPIN affiliates for which your wholly owned entity gets paid from SPIN. Substantial sums as reflected in the SEC filings. I understand that if SPIN hired others to do what you and your wholly owned entity does, the cost to SPIN allegedly would be significantly higher. So I have several questions. The first question, the fact that SPIN would allegedly incur a higher cost if you, voluntary or involuntarily, did not provide those services seems to me to be a significant risk factor. Why isn't that a risk factor included in your SEC filings?
Well, when it comes to reporting and including risk factors, we work with our SEC counsel and auditors to ensure we comply with all requirements. Based on them, we include all appropriate risk factors in our SEC filings.
Thank you. The second part of that question, would it not make more sense if you wish to continue to provide those services to do so as chairman of the board of directors and let someone else be the CEO of SPIN who can dedicate 100% of their time to managing the company and not providing medical services? Dr. Donovan, please answer.
Well, I'm glad you asked that. As I stated during my opening remarks in the beginning of this call, we are expanding our investor relation efforts by meeting with money, fund, and portfolio managers, and with that comes more input from institutional investors regarding governance and other operational initiatives.
Thank you. Again, I would advise people and request if you have any questions, please type them in online and we'll be happy to read the questions and have Dr. Donovan and John Bergeron answer any and all questions. The next question. I don't care what internet search you create. There is no buzz, no discussion, comment from anyone not affiliated with SPIN on the QBH. You folks have been insisting over the past several years how leading edge useful the QBH is to hospitals, doctors for record keeping, reducing litigation exposure, etc. However, you have no third-party sales, even though you have attempted to make those sales in the past. In response to past questions, you deflected any inquiry regarding your progress on third-party sales, opting to redirect attention to affiliates. How do you account for the fact that you have created the device, spent substantial sums on IP to protect it, shown it at shows, marketed it, yet it goes unnoticed as represented by A, absence of mention in any internet searches, and B, lack of any sales outside of the affiliates?
Well, let me answer that, Andrew. I truly believe that QVH is a true innovation in medicine. One of the things that we did was brought in Jeffrey Kronk in August to assist the affiliate program nationwide and to increase the marketing and exposure of QVH. As I mentioned in my opening statement, affiliate programs and sales do require a sales process. The Quad Video Halo is not something that is going to be sold after only one meeting or one call. The sales process takes time, and knowing that we have many potential deals in our sales pipeline is encouraging. But I truly believe we need to remember that QVH is truly an innovation in medicine. And I think by this spring, there's going to be a very large number of people who are going to understand the QVH and how it's a true innovation in medicine.
Thank you. The next question. I know you only act for yourselves, but as a shareholder, what should I make of the fact that at the current bottom bucket price, no insiders, no one on the board is buying a single share? If you tell me everyone has to make their own decision and you can speak of that for yourself, that answer gets an F. Dr. Donovan, can you please comment on the insiders buying or the stock price as a whole, please, at this time?
First, we don't comment on the stock price. Our focus is on building spine injury solutions. We feel that by growing spine injury solutions, increasing revenue, and improving all the other financial results will create shareholder value. With respect to insiders buying or anything of that nature, we don't comment on personal and private transactions. I can say that I am a major shareholder of this company. I work 7 days a week, and I am committed to seeing the success of spine injury solutions and increase shareholder value.
Thank you, Dr. Donovan. Again, if anybody has any questions, please submit the questions online, and we'd be happy to read them and have them answered. At this time, I have another question. Dr. Donovan, thank you for the information. Can you please explain the process of getting a doctor or an affiliate signed up for the Halo? What are the steps and what has been the typical time frame for this type of a deal?
Great question. Every negotiation is different, depending on the type of doctor we're dealing with. One of the things is I want to meet the people first in the environment where we're thinking of opening an affiliate. I want to see the doctor. I want to see how his practice operates, what kind of systems he uses, and what his real belief in providing appropriate, necessary, and reasonable treatment. Some can go very quickly. Some can be very prolonged for a variety of reasons. We've been working on one now for 6 months. I think that it's going to be a positive response, but it's a unique situation because of the multiple services that could be delivered. But here's what we do. We look for docs who are in this environment. And to give you an example, 2 weeks ago, I'm in New Orleans at the American Academy of Orthopedic Surgeons meeting. Never in all my years did we ever see an orthopedic telemedicine company. Never existed. There were 2 there, and we spoke to both, and we talked about the various doctors they're working with. This is an opportunity to identify certain doctors. In all my years of going to the meetings, I have never seen a finance company specifically targeting injured employees from a financing standpoint. There's a company that's growing really fast. There's a need for that company to have access to our products. So things are changing. We have to identify the right people in the right states, the right cities, and they have to be the best of the best. We have met some very good docs who are interested, and this is why, and Jeff and I talk about this often, we need to get a full-time sales marketing person in Houston living here to pursue these leads. And we're in the process of doing that.
Thank you, Dr. Donovan. The next question is for the CFO, John Bergeron.
Hold on just a second.
John, okay.
Okay, go ahead.
The question is, and I quote, John Bergeron mentioned that they are being very careful in the type of capital they take. With that being said, if the company doesn't raise capital in the next few months, will the company be able to operate fully and with no restrictions?
Well, our expansion plans would have to be cut back, that's for sure. But yeah, we have enough cushion on the line that we're able to operate without any restrictions.
Okay, thank you. The next question will be for Dr. Donovan. Dr. Donovan, in the PR release today, you didn't mention the affiliate at Lubbock, Texas at all. Is it closed? And two, in the November PR, you mentioned Halo sales under 90-day trial. The trial period is over. What is the outcome? Dr. Donovan, those two questions could be answered independently.
Sure, I'll answer the second one first. This trial is being done in Louisiana, and it's in one of the major cities. Our biggest problem is high-speed internet connections. You wouldn't believe this. This is the United States. We started a 90-day trial. The first 45 days was a huge problem with the internet speed and connection. All of that has been resolved, and we're moving on. So we said, okay, we'll add some more time. And it's a critical test for us for many reasons. But you wouldn't believe it was the internet connections that we just couldn't get the right service into a major city. That 90-day trial is still in the process. Lubbock, let me tell you about Lubbock. We went there. We to Lubbock, I don't know. We had problems in finding the right doctors in Lubbock to work with us. It's a city where most of the doctors are employees of hospitals. It's really an unusual situation, and that's why we don't consider Lubbock as a viable prospect at this time. We thought initially, and it had a good initial response, but then we couldn't get the docs that could be there to run it full time. They were all tied up with non-competes since they were employees of hospitals.
Thank you. Next question. Sooner or later, the company has to achieve something which it obviously didn't do so far. No wonder the stock is where it is. Will us long-term shareholders will ever get some reward here? Dr. Donovan, before you answer that question, I must preface your answer by saying, please keep in mind that no insider of the company can predict the stock price. I say that only because if someone is asking a question on this call and they want to know if they will get rewarded here or will ever get rewarded, I'm assuming they're asking the question to know if the stock price will go up. With that being said, I will let Dr. Donovan answer the question, but keep in mind there could be no discussions regarding future stock price because we don't control that directly. The company controls it indirectly by operating the company and building shareholder value through there. So Dr. Donovan, feel free to reply, but keeping in mind we cannot comment on the future stock price.
I understand the question. I can say that I'm a major shareholder of this company from the beginning, and most of my shares I bought on the open market. I work 7 days a week, and I'm committed to seeing the success of Spine Injury Solutions and increase shareholder value. We have a unique product that's needed in the injury field treatment arena. And this arena that we work in is $250 billion a year with a B. I believe people are going to understand that QVH is a true innovation in medicine.
Thank you. The next question is directed towards the Chief Financial Officer, John Bergeron. The question is, what would be the ideal scenario in which the company would bring in capital? Would you think debt or equity would be best? John, before you answer that question, let me preface the answer. Please note that the company has not signed any agreements with anybody. Please note that the company cannot disclose what a potential deal can be. John can answer the question on what he would like, but please note that what he would like and what are actual results are not always necessarily the same. So with that being said, John, please answer the question, and I'll read it again. What would be the ideal scenario in which the company would bring in capital? Would you think debt or equity would be best?
Well, at 20 cents per share, whatever the current share price is, I don't think equity is what we want to do because it would dilute, the dilution would be too great. If I could have the best of all worlds, I would have like we currently have with one of the banks have here. We have a line of credit that we draw on, and it's got a maximum of 1.75 million, and we've drawn about 1,250,000 on it. If I could find another line of credit like that and pay a guarantor a certain percentage above that in interest, that would be the ideal way to go. Because one of the problems that you have is that when you get debt and you get this debt all at one time and all the money and you don't get it in tranches, you can't put that money to work. And so you're going to have a negative spread of, could be 8 to 9 points. And that's just not tolerable in today's world. So if I could, I would like to have a line of credit guaranteed by some capital company that we would pay a 8-9% interest payment on. We think that basically if we borrowed like $1 million, we could pay that back in 3 years. We'd also would have it where we would only use the line to fund operations. We wouldn't get a line of credit, then everybody gets a big raise. That's one of the red flags that the capital world doesn't like. I hope that answers your question. Any more questions?
Yes, there'll be a question for Dr. Donovan, please.
I'm sorry?
The question is, what happened to last year's projections of 8 to 12 additional affiliates during the next 12 to 18 months? Now that we are almost into 12 months within that time frame.
What you'll note with this conference call, we're taking an entire different approach. This is why we brought in Andrew. And in order to have expansion, you have to have cash available. We thought we were going to have more cash available from an outside source. We will make every effort to expand and grow, but we have to do it in the right way. And this is why in my opening remarks and stuff, we're not talking about numbers of new affiliates, whatever. We're talking about expanding with our experience of the last 4 years, and based on 4 locations, our numbers of procedures and so forth. So we've said before, possibly that number if we had money to do it. Well, we don't have the money to do those numbers, but we have to keep working to add more affiliates.
Okay, thank you. The next question, I quote, "I am surprised to hear that Dr. Donovan is considering to sell QVH units per se. I had 3 teaching universities lined up to buy exploratory units. However, I had never a single return call from management in spite of reaching out numerous times. Do you care to comment?"
Yes, in the past, we had someone who had some potential contacts, but we feel that the QVH now is ready to be used not only in injury work, but there's some programs being developed that are completely separate from what we're doing, but using the same technology. And it really comes down, we need a full-time sales marketing person in Houston, not anywhere else. They have to be here working with spine injury and QVH on a daily basis.
Thank you. Again, I remind everybody, if you have any questions, please enter them, and we will be happy to say aloud the question and have Dr. Donovan or John Bergeron answer them. So please submit your questions online. The next question is for John Bergeron, the CFO.
Okay.
Question is, did you mean debt funding for operations, as you said, or only to finance new affiliates? John, if you could just elaborate on the funding part, please.
Yeah. The funding part would be only for new affiliates. Our current cash flow is able to facilitate our operations where we don't have to go out and borrow. So any additional lines that we get would be for buying purchases, for additional purchases only. Also, the and guarantor of the line of credit would be able to get some collateralization on that. But no, we'd keep it in a separate fund. We would report to the investor every month on what we have collected, and they would get 60% of what we collect would immediately go to pay down the debt. So it's only for funding new operations.
Thank you. The next question will be for Dr. Donovan. The next question is, would the salesperson travel outside Houston to meet with prospects?
Yes.
Okay. Next question. Why is the COO, Chief Operating Officer, Jeff Kronk, not on the call today?
Once again, we're doing different program with these calls. We have a new IR person, and we wanted to restrict this just to myself and John Bergeron. We also, you notice, there's no slides being put up, and we're not going to do that anymore. We're getting away from that, and the two of us are the ones for the call. I decided it would be just the two of us.
Thank you. Again, I remind everybody, if you have any questions, please submit the questions online. The next question is for Dr. Donovan. How many of the 2017 780 procedures performed were seen by Dr. Donovan or at his center?
Ooh, I don't know. I'd have to go back and check. I don't know.
Okay. To the person that asked that question, feel free to email me, Andrew Barwicki, and I will get an answer from you from Dr. Donovan. The next question is for John Bergeron, the Chief Financial Officer. John, the question is, are there sufficient funds to finance 2 affiliates, 3, or 4?
I would say we would be stretching it if we tried to finance 2 more affiliates, depending on the volume that the affiliates would be able to do. But for every affiliate that you open, we try to have between $250,000 and $300,000. Right now, we've got about $500,000 pad on our line of credit, so I would say no more than 2, and that would be stretching it.
Okay, thank you.
Mm-hmm.
Back to Dr. Donovan. At this time, there are no additional questions. Again, I would remind anybody, if you have any specific questions, please feel free to email andrew@barwicki.com. I thank you for your interest and time today. I would ask now, I'll turn the call over to Dr. Donovan for his closing statement.
First, I want to thank everybody for joining us today. I'm excited by the progress that our team has made over the past year. We believe we have the platform and the people in place to further strengthen and grow our business. If you have any further questions, please don't hesitate to contact us or Andrew. Otherwise, we look forward to speaking with you again in May 2018 for the next quarter.
Thank you, and this call is now concluded. Thank you very much.